Okay, so hello to you all. Today I'm going to make a special streaming session. As I spoke the other days on my Telegram chat, I'm going to make a video regarding the best possible moments for you to accumulate during a bear market session. And we are going to have a look at what happened in the past, like the best moments to accumulate, for example, in the past in the crypto, especially for example with BTC and ATH. And at the same time, I'm going to take a look as well into other coins, other crypto coins, and not just that, but also have some looks into the stock market as well, and how to properly accumulate into the stock market as well. So in general, like for example, let me put just for a moment, this script, so you can understand it for a moment. So I believe here it's being presented. Yes. So for example, we can go here with the daily. In general, if I would have to take, like for example, the last, let's say, for example, it's 2000. So this way we take the entire history of data available. And at the same time, for example, if I would take a look into the, for example, let's take for example 2000 candles, you can see that in general it looks like with this one doesn't appear. Sorry for this. I'm going to put with Hercules, and with this one it can be seen properly. So let's wait for a moment. It's very, very crucial so you can understand all the meaning that we have behind it. So, like for example, let's take instead SPX because we have even more data. So, if you noticed, in general, we have here we have more or less around 25 years of data. And you can see that in these 25 years of data, on average, we had 0.7% movement for the daily candles and 0.8% movement for the daily bearish candles. So let's say, for example, we have these 1000 candles. Since we know that in general, for example, in this period, you can see that we have an overall, bullish momentum. And if we are going to take a look in the entire history available, of this asset, we can see that actually, the market is bullish overall. Like for example, if I will take the month and I will look into its last, I would say 20 years, you can see that overall, the market is tending to go in the bullish directions. And this is not just with stocks, but also, for example, with crypto. If we will take a look into the crypto, we can see more or less the same idea. So overall, the markets tend to be bullish. There is a difference, for example, where we have side market markets, assets. Like for example, if you will take a look into the Euro USD, you can see that most of the times, it's going to move within a channel. We can see, for example, up and down, up and down, up and down, because in this case, it's all based on the power of a country and at the same time the fundamentals all which are behind. If I'll take, for example, even pound USD, you can see the same situation. It's going down, then it went up, then going down, and then went up, and so on. The same, for example, if you will take a look into the gold. The gold overall since its creation, it's a little bit more different. We can see that it's similar with the stock market. We had more or less, a bullish tendency. However, for the last 20 years, it's been more like in a channel period, so we can see that the channel was around 2000. We hit it once, it went down, for example, to 1000, close to 1000, then again up, then again down, then again up, then again down. So it's kind of lately in a side market situation. I'm not saying that this cannot happen, for example, with the stocks. We can see if we take a look into the XPX, there are moments, where we have some side market. Like for example, if you will take this period from here to here, you can see that we would have a side market period in this, I would say 10 years, more or less. So it can happen here as well. But overall, if we're going to take a look at the entire picture, you can see that the market in general is moving in a bullish direction. However, with all of this in mind, we saw, for example, from the statistic at the beginning, that in general the bullish candle are more predominant, like for example in terms of the percentage. However, in terms of the scale, they have a smaller scale, than the bearish candles. What this means is that, for example, from here to here, you can see that we needed, let's say, 60 bars, so in this case we needed 60 bars to make a 30%, and we needed 22 bars in order to lose that 30% benefit that we have. So for the short period of time, we need less time for all of this to happen. However, with all of this in mind, so this would be kind of like, I would say, the first step. The second step is that to understand that markets in general, they are cyclical. They move in cycles. So in general, for example, for the SPX, we have the cycles each 4 years or 8 years or 12 years. In general, you can see we had, for example, a period from here to here. If you will take more or less, let's take with day because it's going to be easier to calculate. So look, for example, all this session right now. Like for example, if you will take, we can take, for example, for this one. So we can see that initially from 2002 and 2007, more or less 2008 initially. So in this case, 4 years it would be, yeah. So kind of like September, October. So yeah, somewhere around here. So we had a 4-year period, and after that we had a crash. Here, for example, we had initially a much higher, predominant pulse. In this case, we have the 12 years period, and then the crash is started to happen. And then, for example, as well, if you will take a look in the past, you can see that the other one is more or less similar with this one. So here, for example, as well, we had close to 10 years, 11 years, if you will take the true momentum. And then, for example, we had a period of like 3 years of crash. So in this case, since we started more or less, if I will take at the peak of January, more or less it's expected to finish around, if you will take 2 years, it's going to expect more or less finish around second, third quarter of 2023. So more or less around here, approximately, give or take. At the same time, so this would be for the stocks. Yeah, I'm going to express myself, in many different ways, but don't worry because in the end everything is going to make sense. Then, for example, if we are going to take a look into BTC, in general here it's a little bit different because here we go by halvings. So in this case, for example, if you will take the halvings from the BTC, we had a halving in 20. So in I think it was May 20, sorry. So we had in May, we had in July 16, and we had November 2012. So in this case, these are the cycles these are the halvings that it happened. And in general, from what I noticed from these calculations, these halvings is like, so the first 2 years, I would say the first year, better said, of the halving, it's when we have the strong growth. The second year we started to have some sort of correction, after that big growth. And then again, because if I will take, so like for example, November, here we have 2 years, here for example the same, we have the 2 years, and then we start the decline. So you can see, if I will take from here to here, the first year, more or less, it was good, it was even a little bit more, but let's say for example first 2 years, so 700 to be, so first year and a half, 2 years, it would place us around this situation. After that we have this period of the short, where we have to repair or correct, I would say, the price of all that bullish movement. Then again we have a period of stagnation, and once we are going to arrive again at the beginning of the cycle, again we are going to have a big period of bullish momentum. And this happened, for example, we can see it in 2012, we can see it in 2016, and you can see it in 2020. At the same time, if you want, I can show you even better. So this is my best product that I have for swing trading, and it's being adapted to 4-hour time frames. And if you are going to take a look, for example, let's take a look at all the long positions that we have. We can see that in general on 2018 and 2022, it's where we would have the issues for the short, for the long. And if we will take a look into the short, you can see that on 2014, well, 13, 14 initially, on 2016 and 2020, we will have the issue with the short positions. So at the same time, if we are going to take a look, you see 2020 and 2020, if you are going to take a look on 2016, you can see the same. From July 2016 is when we start to have, you know, a big period, you know, of consecutive months in a row of losing. And after that, you know, the market tends to recover. So my discovery in this case, it was like, so let's go back with the day. Like I said, so in general, well, actually I will write it here. So in general, you know, on the year of the release, the halving, like for example 2012, 2016, 2020, you know, it's best to have a long position. But at the same time, from my findings, after 1.5, 2 years from the you know, from the halving, so in this case, for example, like 2018 or 2022 or 2014, and you can check this one by yourself from the chart as well. We can see how having a short position is much better and more rewardable than staying in a long position. So what this is trying to tell me is that you want to accumulate as much as possible. So in this case, to continue with the writings, so resume. Before a halving, you want to accumulate as much as possible, and after halving, you want to accumulate dollars as many as possible. So you want to accumulate the asset, in this case BTC, as much as possible. So like I said, when we are before the BTC halving, here it would be the best to take all your dollars and convert them into the coins. So by this point of the halving, you will have to convert all the dollars into the coin and expect, you know, and wait for the long movement to happen. And when you have a short period, like for example what's happening right now, so in these situations, you know, it's best so to accumulate dollars. So once you are going to reach a critical position or a very good bottom position, so in these scenarios you can start accumulate dollars, you can start accumulate crypto, sorry, with the dollars, you know, that you made in this short trend. So the way to do that, I'm going to delete this for now. So the way to do that, let's take a look one more time. So we saw the explanation, we saw the movement that we have in general. The way to prepare for that now is the next way. So I'm not going to take into account, you know, the long movements, because I'm going to expect at least a movement to the ATH. So we are going to reach at least the ATH. You can see that we made the ATH after 1.5 years and then we break it. And then again, we made the ATH after 1.5 years approximately, and then again on the next cycle we break it. And I believe, and it's expected that, you know, we would make the ATH, and in this case around 2025 we would break the ATH. So 2024 BTC halving is going to be around May 24. So we can put here on, well, somewhere around here. So this would be this one, I can write it here. So it's going to be May 24. May 24 is the BTC halving. So we have the data. We understood more or less, I would say, how, you know, how these periods, you know, they are moving, and when is the best to accumulate the asset and when is the best to accumulate the dollars. Now with this in mind, let's start take a look, you know, on which are the best moments and how much percentage we can expect, you know, for this decrease to happen for the crypto. And like I said, once I'm done with this, we are going to take a look into the stock market as well. So on average, if we are going to go, for example, in the past, we can see that in 2012 we had our lowest low was 86%. So I'm going to write it here. So 2013 88, we had a minus 85% correction. And then, for example, if we would go on 2016, we would with the ATH from 2017. In this case, we had an 83%, right? So somewhere like this, 83% as well. So in 2017 ATH, we had an 83% correction. And if we would have to translate these same values in this case, so we had the ATH on the 68%, on the 68,000, sorry. So from 68,000, if you will take 83%, it would put us around 11,500. So in this case, from 2021, it was 2021, right? So from 2021 ATH, if we would have to expect a similar correction, it would put us around $11,500 price. Yeah. So on 11,500, this is more or less our, I would say our bottom, the expected bottom, you know, for this scenario. However, we have to take into account that in this situation, when it happened, the initial corrections, we didn't care at all almost about the general macroeconomical view. We didn't care, you know, about stocks. In this case, the main action and the main event, it was the halving, you know, of the Bitcoin, which is the leading coin of the crypto market, and because of that, the others were following it as well. So if you would have to take into account that currently, and this is one thing which I said already 1 year ago, we are in a recession, and it's going to continue like this, I believe, until the next half year. But I'm going to explain that a little bit more in the stock market area. But I do expect at least second to third quarter of 2023 to reach this bottom. So if you will take this place, more or less, I will put around here, approximately, okay? So if this is going to be the halving, this is going to be more or less expected bottom for stock market, and stop of expected bottom for the stock market around, so we can put here around, I would say, June, September 2023. So this is more or less like I said, at the same time, you have to take everything I'm telling you with a grain of salt, and if you want, you should kind of do your own investigation as well. But you know, based on my calculation or stuff like that, you know, this is my opinion, and you are free to take it. But at the same time, if you are going to take it, I would honestly suggest, you know, to make your own calculations as well. Anyway, with all of this in mind, so we have more or less this idea. So what is telling us is that so in this case it would be $11,500, but once again, I do expect that this time we are going to have we can have a greater correction. The reason behind it is, like I said, is that the entire economical situation or global scale, it's kind of screwed at the moment. So I am not discarding, you know, a 90% correction. So in this case, for example, if I will take from the ATH 90% correction, it would put us, you know, so let's put, yeah, so let's put somewhere around here. So if I will take at the same time the 7,000 point, you can see that is still not even close to Corona level, which we had. So this would be all-time low. So in this case, the all-time low, so this is the all-time low of 4,000, sorry. So actually going to write here, if we will take all-time low from 2020, we have 2020 March, we are around $4,000. 90% correction from the 68K, it would put us around $500, no, $7,000, sorry. So it put us around $7,000. So we would kind of have this way. So with this in mind, I would expect that, you know, this point, so this point, well, so here, and then, for example, if I want to take another color, let me change the color. So for example, then you would have this point, and then of course we'll have this point. With this in mind, sorry, so okay, there we go. So with this in mind, like, let's say for example you would have so let's say you would have $1,000. For now, you would have two different ways of doing these calculations. One, like for example, you can do a normal DCA where you take the months ahead planning. So let's say 1/1/2025. So this would give us from this moment 24, so 12, 24, around 25 months, or approximately around 25 months from present. So this means we have $40 to spend each month. So what is this telling us is that, you know, starting from this point, you don't care about the price at all. You each month you are going to spend these $40 until the period which you have in mind. With this, you assure yourself that you are going to have a linear price of the accumulation, and at the same time, it's going to, you know, it's going to give you a good profit. It's going to give you a good margin. The second is like you can do value DCA. So, but it's a little bit more too complicated to calculate. But the idea behind it is like, for example, so let's say you are at minus 50%, you put $1. You are at minus 60%, you put $2. At minus 70%, you put $4. At minus 80%, you put $8. You know, and so on. You know, this is another way which you can do. It's a little bit more complicated, but I can assure you that this one is going to give you a much benefit and much more profit than just a simple DCA, because the reason is so like for example, and as well, like for example, if you would have these values are kind of a little bit weird, but let's put for example something like this and 75, and let's put 2, 5, 8. And at the same time, for example, imagine the asset of the price is going to move 25%, and if it's going to move 50% plus 50%, you are going to put $0.5. So this is a value DCA, and like I said, it's a little bit more complicated, but you can make, you know, some calculation the same like with the DCA, with the period of the months ahead that you would have, but in this case, like I said, you would do it proportionally. The other way is like I said, so we know that in this case we have some values where we have in mind, and let's assume, for example, in this case that so I'm going to delete all of this. I hope you know more or less it's you already save it, or you can also pause the video after that and read them again. But I need to make some space for the idea which I'm going to present, which I'm using myself as well. So we are going to delete those because we have more or less the period in mind. So we know, and we are going to expect an 80% accumulation of the asset. So let's say, for example, out of that, instead of doing the DCA of DCA, so once BTC will reach 1,400, you will put here all $1,000. So with this one, if, so like I said, you can expect at least let's say 2 years. So in these 2 years, if you enter at this point until the 80H, although there is a much higher chance that once we reach the 80H it's going to break past that, but if you would make the calculation only until the 80H, you know, so in this case you would get more or less around 500% profit. So in this case, if we reach 80H, that's going to be more or less around 500% of ROI for 3 years of holding. If the situation is repeating like in the previous holdings. At the same time, like for example, if you enter on, if you would like, oh, you know, but so you are like, no, but you know, I'm a little bit afraid, so I believe, you know, 10K can be a very, very huge psychological barrier. So you will wait until 10K because it's a huge psychological barrier. So you, so we enter there. So we enter when we are around that. So in that case, for example, if you would enter on 10K, always here, and we will reach the 80H, in this case we will have a 600%. In this case, we would have 600%, right? And lastly, for example, if you would enter in the 700, so if I will take 700, if we would enter, no, but actually instead of 700, I believe better it would be to take 11,500 and no, I'm going to put it here. So on average, so we know that 11,500 is equal our expected, you know, our expected 88 based on the previous years. At the same time, we know that 4,000, more or less, yeah, 4,000 in 2019, 4,000 equal the ATL from 2020 and 2019 Corona. So we can make an average, which in this case is going to be 15,500, which in this case is going to be 7775, right? 0.2. So in this case, if you will take this average, yeah, I think it's correct, 750, 750, yeah. So in this case, with this average, we will move instead for 750, something like this. So in this case, if you would enter here, you would have more close to 800% ROI. So if you put all in at 7750, 7775, you would have around 800% ROI. You know. So these are different scenarios which you can take in this case. So it doesn't matter, you know, like in which one of those you are going to enter. You know, I do believe that all of them can give great results. You know, and they have a more than average, I would say more than 65% that they are going to repeat. Now the reason behind it is that, so we saw the data, we saw more or less the values that we have behind, the probability which you can have in this case for the ATH, and then at the same time, so I'm going to show, you know, why these things, you know, they are so probable that they are going to happen. I'll have to remove for a moment, you know, all the drawings. So I'll remove all the drawings, and let's go with BTC. We have this one, and at the same time I'll put it one more time, and in this case let's go with 2018 period, and then you are going to see more or less what did happen and why there is a very high probability is going to happen again. So in this case, if we're going to take 2021, you can see that we initially had, I would say, close to 70% fall, and you can see that from the highest high until the lowest low right now currently we have the 70% low. So we can see this period from November, although here it started in December, it started a month, I would say a month earlier, but if you will take for example November 21 and December 2017, you can see that very high related. So in this case, for example, you can see that we had until September. So if you will take until September, July, September, you can see that we have this growth of 70%. You can see the similarity in the charts as well, you know, the continued decline. But all of this, like I said, it's happening in like, so we reached the 70% from the ATH. We reached the 70% in 310 days. So here we reached the ATH initially in these days, but then we consider this accumulation, you know, over and over again. And then once we reach around the end of the year, so once we are going to have like 1 year, I believe as well is going to be the final crash. So like I said, we had here the 72%, and we can see that in this case the final it will be around 84%. So if you will take from the highest high, until the lowest low, an 84%, it would put us, like I said, around the value of 11,000, 11,500. So more or less close to, you know, more or less around the 10,000 value. So these, you know, these 2 points, it's they are very similar, and they are very similar. And we can see the same, you know, for the stocks. So like for example, if I will take the SPX, and I will go to the SPX on 2008. So I'll do something like this, you can see it as well. So we had initially this huge growth over, you know, over these last years. It was here as well. Let me make it more something like this. So if we will take from the highest high until the lowest low, you can see that we have a 57% decrease, or more or less in around 600 days. So close to 1 year and 2 quarters, 1 year 3 quarters, more or less around there. We can see that initially we had here 300 days, and if we will take the 500, like I said, 500 it was. 500, and if you will take 500 from the highest high, you can see that it would put us around the second quarter of 2023. So more or less the initial date which I said, and I am expecting, you know, for all of these, you know, downfall, world economic trend, you know, to go forward. And we can see that right now we had a 24% decrease. If we will take from the highest high, the 24%, you can see it more or less it's here. So we can see that though it's not, it's a little bit more sharp, you know, in our case, but you can see we had a decrease initially of 24. In this case, we had a decrease of 18, then we grew 10. So more or less kind of like here, you see we grow 16 because we decrease a little bit more. Then again, we started the decrease, and then probably we're going to have another step of accumulation, support, whatever you want to call, and then slowly approaching the end of the year, you can see that we are going to go towards the lowest low point. So if I will take not this, but if I will take at least a 50% decrease for the stock market, you can see that this is going to put us on the lowest low from the corona level, or maybe, you know, so there is a very, very high probability that maybe we can go even lower than that, around 2000. But then again, I was showing this in order to explain how charts are similar and the periods that I have in mind, you know, they synchronize for both the crypto and the stock market. However, let's go back with the BTC. So we continue, you know, with our analysis, and then we will go back to the stock market as well. So like I said, our accumulation period is going to be somewhere around this place. You'll have to wait, like I said, based on the previous years, around I would say close to January 2025. You know, if you want to be more safe, you can put it second quarter 2025. But that would be, you know, kind of like the climax of the bull trend before the things might start again to relax themselves, you know, a little bit. So in this case, if you are going to wait for this, you would have some huge potential gains, you know, like being able to make 500%, 600%, like I said, in 1.5 years, 2 years waiting period. That's a huge growth. So all of this was initially with the thought of BTC. We know the dates, we have more or less the dates in mind, and now let's look for even better assets which we can invest. I'm going to speak about ATH, and I'm going to give maybe another one, but yeah, let's take a look into the ATH because it has an even better potential. So we are going to use the index chart. So again, we don't have the data from the back, but then if you noticed, from 2017 until the lowest low, we had initially 65%, but then the biggest one, it would have been here, which is more or less the same like it happened with BTC. So in this case, we would have a 94% decrease. So this would have been for this one. We will take the Corona one. You can see the 65% like it happened, for example, like I said initially, the one initially which was here. And then you can see the bigger one, which is going to happen right now. So if I will take from here the lowest low of 95%, it would put us on 285. If I will take a 90%, it would put us on 480. And if I will take an 84%, which is going to be for the BTC, it's going to put us around 760. So we can make them a little bit more square, and it's going to be 500, 250, 750. And currently we are on 1310. So if you would enter, for example, on the BTC value, so in this case, like for example, if you would get the percentage of the client like with the BTC, and we will go for the ATH, we will have a potential of 550. If you will go from the other one, you would have an 800, and from the lowest low, you would have a potential of, wow, that's huge, 1.8 thousand. But then again, I believe you can make an average of them all. So it's going to give you more or less around the 500 level. But then if you would like, you know, to start accumulating, like the rule from before, I would say from 1000, because you can see we already broke it once and we went to 882. So this one can serve as a critical point, I would say. And in this case, from the 88 until this point, you would have an 81% decline. So you can calculate from this point as well if you want to accumulate. So in this case, you will still have 450% ROI for this. But like I said, this is calculated with the 88 value, and I have the belief and the faith that once we reach this place, imagine all these people who enter here, they would like to take some profit, so the price probably it might go even higher. But we calculate with the with the 88. Although like I said, the profit can be even higher than this. So in this situation, I would say a good start accumulating point, it would be around 750. So if you go from 750 all the way downwards, if you noticed Corona level, well, it's around 100, but yeah, this is kind of like too much. Like for example, if I will take 88 until 100, it would be 97% decline. For the 88, I don't see it so much possible. A 90% maybe, but a 97 is kind of like too much, This one I see it. 500 I see it. So I would say this area from here, like this part from here, it would be an amazing strong point for accumulation. So let's say for example you will get an average of around 650, 650, yeah, 650. So from 630, what this one, 650, 630, 625, yeah, here. So from here, 625 until the 88, you would have 600, 700% ROI. And all of this, like I said, more or less around 2025, first quarter, second quarter, if you want to be even safer. So then again, that would give you like 2 years of waiting period approximately for a potential ROI of 600, 700%, which is huge. One more time. So I would say, those two are kind of super valid points and entry points for the ETH, for the accumulation period. And like I said, there is a probability as well that, let's say for example, you would enter around 750, you will waste all your money and the price might decline even lower. Don't you make the mistake, of selling it, because you have to understand that true wealth and true richness, it's being made, in a bear market, because you have these huge opportunities. And also, if you are going to be so damn afraid, then just enter with the money that you can allow yourself to lose. Like in my case, honestly, I'm telling you, if you want to do it, sure. If you want, don't, but don't take it like 100% guaranteed. I'm going to go all in, so I have these values, and once these values are going to be hit, I'm already going to start, and I'll go all in with everything that I have. I'm not going to borrow though, for sure, because that's a stupidity, honestly. It's a degenerate move. But from all the other assets that I have and all the capital available that I have in dollars, in euros and fiat, better said, all of it I'm going to go all in into the market. And in my case, if you want to know a little bit, I would put around half, I would say, on the BTC, around 30% I would put on the ETH, and then for example the other coins which I'm going to take a look. I'm thinking about XRP, USDT. The reason behind it is that we have the effect with the Ripple, and because of that, there is a huge potential into it once they are going to win the case with the SEC. And in this case, for example, we can calculate as well, like if you want, I would say like 90%, so let's put 0.25. From 0.25 to the ETH, it's around 700% movement. At the same time, Cardano, I would say as well, it's a very powerful coin and with a lot of potential, and kind of like the USD. Let's see if we have a more advanced chart. Kraken. So we're having Kraken. So we can see that in this case we had a decrease of 97%. So I'm going to expect at least a 90. So a 90 would push us on 0.3. If you want to take Corona levels, claro, you can go with 95. So 0.2, I would say, 0.2, it's a good entry point for ADA. So in this case, if you will take 0.2 and you will go for the ETH, it will give us a 1.4 1,4,000% growth. So as well, it has a huge opportunity. The other one I would say as well, I like DOT. So in this case, for example, DOT, it's kind of close to it. I would say below 5. It's already good accumulation point. This one as well, it have a potential of 1000%. For this one, EOS USD, this one, yeah, this one I would put a little bit less, but then again, you would have a very powerful potential growth. But I would say BTC, ATH, XRP, ADA are going to be my main ones. Maybe Bitcoin Cash as well. Yeah, so if I'll take a look into the Bitcoin Cash. But the reason I don't like it so much is that we didn't break the record from the 2017, so I'm kind of like skeptical. But I do believe, you know, the 1000 point, maybe we can reach it back if the BTC and the entire crypto movement is going to start, you know, with the crazy spikes. Can have some potential maybe, but the other ones, you know, are the main ones. So I'm telling you, don't be afraid, you know, use this in your advantage and make use of it. So this could be more or less for the crypto, the accumulation which I'm planning for the crypto. I give you 3 plans. You can dollar average, you can value average, or you can go all in once we hit a critical spot based on the statistic which you had from the past. So with this in mind, told me about take a look at gold. Sure, I'll take a look into gold, but at the end, because this is more for stocks and crypto. So let's go back with the SPX and let's start and take a look the general market as well. So based on the, like I said, based on the previous movements which we had, like for example the 2008. So in this case 2008 we had a 100% movement. This one from 90s to be even higher. So in this case we had 300% more or less, 300% in like 10 years. And if you will take this one from now, we will have around 600% in 12, 13, 1015, around, yeah, in around 12 years. So after all these, you know, we can see that in 2008 we had a 50% crash. In the boom period of CryptoCon we have a 50% crash. This one I think it was a 30 something. For example, in the 72 we had another 50% crash. So yeah, before that in 68 we have a 36. You can see that the 36 was here. It was in the Corona. We had a 36%, 30-35%. It's already happened, and after that we had a 50% crash. So in this case, if you will take the 50% from the ATH, it would put us around 2,400. So we will have this one. If you will want to take the support, because it acted in 2018 once and it went here as well, but over here we broke it. But yeah, if you want maybe 2.2 and 2000. If I'll go here, it would be a 58, 54 and a 50%. You can make an average out of all of them, but yeah. And then for example you have the 3000. So in this case, as I said, you have 2 options. You know, if you have access to, you have 2 choices. If you have access to options, you can put, I'm going to show you some orders, you know, for with a very high time frame ahead of you. And the other opportunity would be like to just own directly, you know, the shares. In this case, for example, you would go with either SPX or the SPI, because they are 99% correlated, so you can do it in both situations. So let's assume, for example, you would want to go with this one in mind. Of course, you are not going to have the same growth like you would have with the crypto, but as a plus, you are going to have a much more stability and safetiness. So in this case, you can see that after this growth in general, so after these crashes, like for example, if you will take this one, and I will take, for example, from here 1 year. So So you can see the first one here, it was around, it's a huge, it had, from the lowest low point of course, you would have a huge momentum, so you would have around the 68%. Then for example, of course, you will have another crash, and then the other one. If you will take for example this one, here you can see that in this case, if I will take 1 year, you already are going to have around 50%, so in this case you would have a 50%. If we will take for example the one from the 70s as well, if I will take 1 year, so for example here, and I will go more or less around 40%. So we have a 45%, 40%, and 60%. Taking into account that the average growth is around 10% a year, compounded, I would say, for the XPX. So if you will take that into account, like for example, if you would enter here from 2.4 thousand and you will get a 40%, it would put us on 3.5 thousand. If you would want to go from here to this one, you would need a 100% movement, of course, from the lowest low. So I believe that the best possible moment for this one, if you don't like to short or if you don't have the possibility to short, is once we are going to break the 3000 barrier, you can start accumulating. So you can start DCA from the 3000, because it's going to continue to go probably downwards, and we are going to make an average of 2.7, 2.6, I would say, if this is going to continue in the direction, you know, I'm expected to go. And the other one is you can have a little bit more patience, but this one is a little bit more difficult, you know, because you have to deal with yourself. And in that case, for example, once you start to reach 2.6, 2.5, you know, start accumulate. So in that case, you know, your buy is going to be around this one, you know, the average, if you like to do it this way. And at the same time, like once you are going to reach these places, a huge opportunity that you would have is, for example, to buy, you know, an option with a leap year. So like for example, option chain SPX. So I had the option strat, I think option strat was called. I have this one. So in this case, for example, what you will do a long call, and fortunately we don't have it here so much. I want SPX. Until where do I have for XPX? So we have it. So let's assume, like I said, let's assume all of this is going to happen around. So the crash is going to be around May, more or less, which when you can get around these values. So probably around here. So it would give us at least half a year. So that means that we would like to buy. We can buy December 25. This one would give us even more time. No, December 24, June 24. So you will buy this one, and in this case, the call that you would like to buy, you will want to go very, very deep in the money, because you want to have a lot of intrinsic value. So in this case, for example, we would bet that the price is going to be above 2.5. So in this case, you would have November 13, 2.5 intrinsics. So we would have a period until June 24. So we would have kind of this margin. If you will enter, let's say around June, May. But this, of course, you will have to wait until May. So in this case, Carl is telling that the break-even has to be, but there is no liquidity, of course, right now, because we have to be close to those periods. One of them that has liquidity, it doesn't have either. So the breaking point, yeah, this one it would be kind of like the best. So it has to be around 3.8 thousand. So 3.8 thousand. If you will take from, let's say around here. So here you would need a 46% movement. You need a 46% movement. But this one we can calculate it with the VIX. So if we go on the VIX and we go, for example, on 2008, so after the decline of this one, you can see that the VIX was around 50% and decrease, and by the end of December, so after 1 year, we started to reach the lowest low. But in the first months, we were still around 50%. So we can expect a 50% increase in the price. If you would accumulate from these points, from 2.6 and 2.9, you will break it. So if I'll take a look on the table, what you would like to, because in this case it's taking into account it's taking into account the current price, so you just need a 4% movement to happen in order to be to this break even. So yes, so like for example, if you are on 2.5, yeah, now I get it. So if you are on 2.5, let's say you enter here, you will need just to make this small, but not even this, but yeah, you would expect that, let me delete all of these ones. So you would expect that in this period of time of 1.5 years, you would have enough movement to make that 3%, because if you are going to be at the close of the bottom, your expected movement after that for the next year is going to be around 50%, and you will have to pay a commission of the 4% to be the break even. So in this case, you would have the 40% of initial profit. It's like, for example, telling that plus in general, I believe the leverage is 6, so you can have around 250% with this call of profit, for 1.5 years. So it's more or less one way to do it as well for the SPX. You can do the same for Nasdaq if you want more volatility and more aggressivity, but more or less that would be the way that I would do it, and I'm going to do it for the SPX. But like I said, the best moment is to wait until we are going to be close to that, to those points, which I have specified here. So here, I believe that the best way is to the best way is to buy a call with a very, very big period of time in mind, 1.5 years, 2 years, and you can pay the 4% commission, which is going to cost you in theory, because the commission is like for you to get to the break-even point, So, but in this period of time, you are going to have more than enough to break it. But yeah, the difference is like you need a lot of capital, but because you have to go with an in the money position. But if we will go, for example, instead with the SPI or micro or something like that, like for example, if you'll go in this one, and I would say that it wants to be like more than 245. So in this case, for example, you need 13,000, and one more time, you would have the possibility to make around 240% because of the leverage that comes with. Because I believe, at least on interactive broker, it's around 6-7x. So that's kind of what you expect here. But of course, it can be even higher than that. I'm trying to give like a moderate amount. So I believe this period is going to be a huge opportunity for both stock market and the crypto market. Of course, let's speak about the depressive part as well. There might be a possibility that maybe the market gets so fucked up that we reach this place here and it's going to continue to stay, or maybe go even lower. It can happen, but that would be a huge black swan event, and believe it's not the case, but you never know. Maybe the world war is going to start, and I don't know. You have to be preparing that as well. That's why I'm repeating. You have to do all of this with money you can allow yourself to lose in case something bad happens. You know, even if it's less than 1%, it's there. It's never, it's never guaranteed. Yeah, it's a huge probability, yeah, to make money, but it's not guaranteed. So, yeah, you have to take that. You have to take that into account. So, yeah, I hope you enjoy this session on how to build wealth. And you got some key points, from where you can start accumulating and how to accumulate. And yeah, I'm going to come back in the future with more interesting analysis like this one. Thank you all for watching, and see you next time. Bye bye.